the gold price was fixed at $35 an ounce, right? So the Treasury's job was to keep the gold dollar exchange rate at $35 an ounce. And it was spending most of its time juggling between gold and the dollar to keep the price at $35 an ounce. And there's a lot of memos that say this is what the Treasury is doing to keep the gold price at $35 an ounce. GATA pulls up a memo from back in the days when we had a gold dollar standard with a fixed gold price and says, look, here's evidence that the Treasury was manipulating the price of gold. And it was, because that was its job prior to 1971. But since then, there's no manipulation.
Just one more note and I'll move on. There, just to push back a little bit, there are notes from as recently as Alan Greenspan, whose term came after the end of the Bretton Woods. And he has said on record in transcripts at the Federal Reserve meetings back then that they would, I'm paraphrasing, of course, that they should sell a little bit of gold to maintain a certain range. Now, they were just talking about it. There's no evidence, of course, of them doing it, but that was recorded on transcript of him saying this back and forth with other board members of the Federal Reserve.
Alan Greenspan was interested and still is interested in gold. The rest of the Fed was not. I don't know that he ever said that. I've never seen those transcripts. What I have seen is testimony that he made before the Congress where he said other central banks would sell gold if the price of gold rose. And what he was actually doing was he was talking about questions the congressman had for him about the OPEC behavior to maintain certain oil prices. And he said there's a problem with that because oil is a fungible commodity and OPEC can do X, Y, and Z, but non-OPEC members can take advantage of OPEC's efforts to profit from it. And he said oil is like gold. There's just so much out there that there's only so much that you can do. And some central banks might try to buy and sell gold, and if the price of gold rose, they would sell more and lease more. And if the price of gold fell, they would buy less or buy more and lease less, which is economics 101 in a free market system.
Okay. Well, this does lead to my next point about central banks' efforts in buying gold right now. This is a good segue now. We're going to bring it back to the present. Jeff, this last quarter, the World Gold Council recorded a record amount of gold buying from central banks around the world, 399, close to 400 tons bought in the latest quarter of data reported. Much of this buying was from quote-unquote mystery buyers. It's not reported or known, perhaps publicly, who these buyers actually are. What we do know is that according to World Gold Council data, this is the most buying on record in any quarter in recent history. Can you comment on this? Do we know who these buyers are?
Well, let me clarify what they said. The World Gold Council said our data providers, Metal Focus, say that there is this 10 million ounces, 400 tons of mystery purchases by central banks. And the World Gold Council said this is unreported and undocumented, and it's subject to change with further research and investigation. So, the World Gold Council was sort of distancing itself from that number. CPM Group uses official data figures. When we know that a central bank is doing something and it's not reporting it, we take that into account. China used to do things and not report it, and we took that into account. They stopped doing that in 2015 and announced we're going to stop doing that. And when we buy and sell gold, we will report it on a monthly basis. And they have been reporting their gold holdings on a monthly basis since 2015. Other central banks used to do private transactions, but they really got out of them around 2005 and earlier. So we tend to use official statistics. We'll adjust them when we see something. But in an absence of information confirming a 10 million ounce secret purchase, with none of the gold bullion dealers saying that they participated and none of the other central banks saying that they've done it, and it not showing up in trade data, we're hesitant to add that to our views. So we're taking a very skeptical view of that number until we see concrete evidence that it's real.
Okay, interesting. So you're skeptical of that number, but what about the notion that China doesn't usually report? I'm not saying it's China, but I have read, and it does seem to be the case in the past, that China doesn't report their gold purchases in real time. You'll see that in prior years there was a huge spike in Chinese purchases, but that's just the 1 year they decide to report it. Perhaps they bought it over several years. Could that be the case now?
As I said, China used to do that. They stopped doing it in 2015. They said they were going to stop doing it. They explained why they used to do it, and they explained why they were going to stop it. It hasn't been done since 2015. I can bore you with the details of some of the one-off purchases by the People's Bank of China in 2000, 2001, and then again in 2009.
Right.
But it's history. It's not the market.
I think the broader question here is, regardless of whether or not the data is accurate, there does seem to be this trend of emerging economies buying gold all around the world. Is this a trend that you've observed with your own research? And if so, why are they doing that now? Why are they doing that this year?
Central banks are buying gold to diversify their portfolios, and they're buying other currencies too. Something like 80% of world trade is still denominated and paid for in US dollars. A lot of the rest is denominated in dollars but paid for in different currencies. And there is a move to try to diversify international payment settlements. And central banks, a lot of developing countries don't have gold reserves because they were not major exporters of goods prior to 1971. Most of the central banks that have a lot of gold were major trading countries prior to 1971, and they settled in gold on a monthly basis. I have all these dollars. You're saying that gold is worth these dollars are worth $35 per ounce of gold. Here are my dollars, give me your gold. And there was a run on U.S. Treasury gold in 1967, 1968 as a result of that, which is why Lyndon Johnson closed the public sector gold window in April of 1968. So that was there, but these other emerging countries were not major trading partners. They didn't settle their trade in gold, or they did settle it, but there was not a lot of it. So they don't have a lot of their reserves in gold, and they're buying some. Now, with the exception of Russia, they're not looking to have a major portion of their monetary reserves in gold, but a relatively small portion. 1, 2, 3, 5% of their monetary reserves in gold. It's all in our gold yearbook. We have it spelled out, all there in our annual gold yearbook. We have that data. So that's what's been going on. And yeah, it's accelerated. And with the stronger dollar over the past year or two, central bankers have been saying, I have a lot of dollars. Most, 60% of my foreign exchange reserves are in US dollars. The dollar is very strong. There are all these people saying that the dollar is going to collapse or it's going to fall sharply. Even if it doesn't fall sharply or collapse, it's worth a lot more. So this is a good time to convert dollars into gold, because in 2022, the dollar is strong and gold is down. It's a good time to convert from, take my profits out of my dollar holdings and put them in gold.